back, ladies and gentlemen, to Apartment Love's channel. Joining us, as always, is the Chief Executive Officer, Trevor Davidson. Welcome back, sir.
It's a pleasure. Thanks very much.
Always a pleasure to have you on here. So last week, we kind of talked broadly about Apartment Love's business, exactly what you guys are doing, your kind of broad diversification and kind of, helping people get to their new apartments and kind of how you network that and kind of build margins and capital. We went over a lot, but I want to kind of dive further down into the balance sheet kind of questions, because recently you guys completed a fully subscribed non-broker private placement of common shares, raising proceeds of just about $250,000. What is your plan with that capital, and how are you guys kind of utilizing your current funds moving forward?
Yeah, no, it's an excellent question. So the small round, the $250,000 round, was very quickly subscribed, which was a great testament to what we're doing. And ultimately, with $250,000 in today's market, we're certainly not going to be able to do too much. However, it did allow us to action a number of strategic marketing and investor relations programs to broaden the reach and the engagement of APLV, our CSE listed stock, and then as well just the general awareness of ApartmentLove as we continue to grow here in the United States and then elsewhere around the world.
Now, are you guys looking to do more acquisitions down the road? I was kind of going through a lot of your filings, and recently you guys have been acquiring a lot of different kind of software-based companies that complement your current business. Is that something you guys are still looking to do moving forward?
Yes, absolutely. So our growth program is really driven by two particular engines. One is our organic program, which we can get into in a minute, but the acquisition, growth through consolidation, is a particular interest and certainly a great importance to our board and to all of our existing shareholders, as well as all new prospective investors. As we see the market, especially in the United States, is deeply fragmented, that with the capital partners that we're putting together to be able to go through and consolidate the space by buying good assets at fair and commercially reasonable prices, it makes a lot of sense and a lot of good business sense to continue to grow through acquisition. And it certainly is going to be a key driver in our growth program.
Something to look forward to for sure. So I wouldn't mind diving a little bit into your capital structure as well. If you can offer any insights between like the retail versus your institution, and primarily like your insider ownership as well. What kind of stake do you guys have within your company?
Yeah, certainly happy to. So the business has just at a blanket, we have a flat corporate structure. We have just the one share class. We have all common shares. The way in which we did the non-brokered, so the non-offering prospectus, really walked out onto the exchange, meant that we had a fairly tight group of existing and very friendly investor shareholders that we're certainly looking to grow that investor base. And certainly the appeal of the U.S. retail market, as well as the institutional larger private equity, is of particular interest to the company as we continue to grow. As it is today, the stock is well held by insiders. We've got about 20-25% insider ownership, and certainly I'd submit that those are fairly friendly hands as we continue to grow and execute our programs here in the United States, and then again elsewhere around the world.
Yeah, that's incredible, man. I really appreciate these insights. Is there anything you guys are primarily focused on going into the end of this year into 2022, or anything you want to share to the investor audience?
Yeah, absolutely. So, as I alluded to, our growth is driven in two facets: the organic program, investments in marketing, as well as in sales efforts to generate our own naturally occurring business, as well as the acquisition program. And quite frankly, as we look now into the early part of 2022, and we see that now is the time for us to get active and to continue to make good and significant investments in our search engine optimization, as well as we begin to put together our sales group and focus on key markets where we have position. It makes a lot of great sense from our organic side, and that's of particular importance today. And then as well, having gone through now the lion's share of 2021, our vendors and those that take over prospects of ours are now sort of fulsome in their disclosures, and we can have specific and pointed discussions on what they actually did, what their real earnings were, and how we can put together an attractive takeover offer so that we can complete more and further drive the business through acquisition. All of that teed up nicely for 2022.
Great insights, Trevor. I really appreciate your time today.
My pleasure. Thank you again.
In light of this, folks, if you ever have any questions, always let us know what you think in that comment section below. We can bring it up to Trevor at a later date. But stay cool, stay awesome, and I look forward to catching you in the next one.